Hello, welcome back to the channel, guys. This is gonna be a quick update video on how the market has been doing. As you can see, I'm not at my usual studio right now, but I still want to get this video out because there are some major things happening and I want my viewers to stay in the loop. Obviously, the market is so euphoric right now, but this is the time to be cautious. There's a lot of bullish news this week. Meme coins are taking off again, but this time the hype is coming from TikTok. So we'll get into all of that. Make sure you subscribe and follow me on Twitter because that's the quickest way for me to share the trades I'm in. For example, I've shared my tactics on how to gain 40% in just 11 hours with plays like Virtual Protocols. So be sure to follow me there, and now let's roll the intro. First thing first, let's get it out of the way and talk about meme coins. Meme coins are increasingly gaining traction on platforms beyond Twitter, with TikTok emerging as a significant player in driving their popularity. A prime example is Chill Guy, a meme coin launched just 2 months ago on Pump.fun, fueled by its association with the viral Chill Guy dog meme. The token has experienced a staggering price surge, growing 482,000% in just 7 days. As of now, Chill Guy is still sitting at around 434 million market cap, ranking it among the top meme coins from Pump.fun. Well, I know you could be like, well, Jamie, why did this blow up? Well, turns out it's the Gen Z like us. TikTok's massive Gen Z user base has played a pivotal role in the meme, amplifying the trend through short-form, humorous videos. Posts like when you buy the Chill Guy token because you're just a chill guy trying to make some money resonate with TikTok's audience. I know there are research teams out there trying to hire people solely to analyze TikTok for meme coins. Whether you are into TikTok meme coins or not, just remember that 99% of meme coins are meant to fail, so allocate just a small portion of your portfolio to just have some fun, but never be overexposed to plays like this. Next up, let's talk about Lush AI. Since its launch, Lush AI has generated 20,000 in total revenue and attracted 6,000 users, a steady and calculated growth over just 3 months. Well, for those of you who don't know, Lush AI is a crypto powering the blockchain-based AI modeling agency. The project aims to revolutionize the influencer and modeling industries with sensible and accessible AI models. Its features include a decentralized marketplace for AI models and even an AI-powered OnlyFans-style platform. The current standout AI model is Jenny, an AI agent that crowdsources intelligence in real time. Users can upload images, videos, and memes to her memory in exchange for token rewards on the platform. This keeps Jenny updated with the latest Web3 trends and narratives. Jenny also has her own token unlocking exclusive content, including NSFW material, and she has been making waves, even getting coverage from AI Jazeera. It might sound bizarre to some, myself included, but many people seek companionship, and AI models like Jenny fill that gap. As AI continues to grow and integrate into various sectors, it does feel like the interaction with AI and robots will become normalized in the near future. This is exactly why we have been focusing more on AI plays lately. While some other sectors like NFTs and GameFi might feel like a come and go, AI is only going to grow bigger as companies pour billions into R&D alone. If you're not already exposed to AI investments, now is really a good time to start exploring some of the play. Well, moving on to the next piece of news, Gary Gensler is out. The SEC chair has announced his resignation effective on 20th of January, which is the same day Donald Trump takes office. Known for his tough stance on crypto, Gary Gensler shared his plans on Twitter, thanking Joe Biden for the opportunity to lead SEC. Of course, the crypto markets didn't miss a beat. Bitcoin surged to almost 100k, like 99.5k to be precise, while Ethereum and Dogecoin also gained momentum. Everyone is so happy that finally Gary Gensler is out, because during his tenure, Gary Gensler labeled crypto the Wild West and cracked down on the industry with aggressive enforcement actions. However, his regulatory approach hasn't been without challenges. Key court rulings overturned several of his initiatives, from treasury market rules to climate risk disclosure requirements. While Gary Gensler defended his track record in his resignation post, many in the industry viewed his methods as heavy-handed. Now, all eyes are on Donald Trump's likely pick for the SEC, Teresa Gulen, a securities lawyer with a history of defending crypto firms. Her potential appointment suggests a softer regulatory approach that could undo much of Gary Gensler's agenda. For now, the crypto market is still riding the wave of this news, with traders betting on a more lenient regulatory environment ahead. Well, speaking of which, let's look at the overview of Donald Trump's new government and what this could mean to crypto. The incoming Trump administration is shaping up to be one of the best and most crypto-friendly governments we have seen, with key figures actively supporting digital assets. Vice President J.D. Vance, for instance, holds up to $250,000 in Bitcoin and has pushed for legislation that safeguards crypto companies. Treasury Secretary Scott Bessent has also been vocal about his support, calling Bitcoin a symbol of freedom and innovation, though he hasn't publicly disclosed any holdings yet. Health and Human Services Secretary Robert Kennedy and National Security Advisor Michael Waltz are definitely adding to the pro-crypto vibe. Michael Waltz even backed a bill to push back against CBDC surveillance. And then there's Tulsi Gabbard, now heading up as Director of National Intelligence, who's all about financial privacy. Next, of course, there's Elon Musk, co-leading the newly created Department of Deficiency. His influence on crypto is hard to overstate. Elon Musk's unwavering support for Dogecoin and Tesla's massive Bitcoin holdings continue to fuel adoption and shape public sentiment. With so many high-ranking officials backing crypto, it's clear that this administration could usher a new era of favorable policies for the industry. So everyone is looking forward to 2025. But the Bitcoin hater Jim Cramer called owning Bitcoin as a win. During the lightning round on his show, Mad Money, if you are asked about investing in MicroStrategy, the company known for its massive Bitcoin holdings. So here's Jim Cramer's response. Skip the stock and just buy Bitcoin directly. He called it a winner and suggested it's a better play than MicroStrategy itself. Naturally, this has people worried if we have hit a local top for Bitcoin. Well, why? Because Jim Cramer is famously known for his inverse effect on the market. Literally just do the opposite of what he says and you often do well. If that's the case, it might be time to take some profit. For those of you who follow this channel, your crypto bag should already be up a lot. We've talked about Chainlink when it was $5, Near Protocol at $4, Stacks at $1. Those should easily be 2 to 3x by now. So remember, as we are moving forward in this bull market, taking profit isn't a loss. If your coin pumped 30%, consider taking 15% off the table. You can always take more profits gradually if it keeps pumping. It's all about staying smart, not selling your entire bag and protecting your gains as the market heats up. Next up, we also have news about Cardano. Cardano got excluded from the Wyoming stable project. Well, this channel usually doesn't cover Cardano, but this one is too funny, so I had to add that in. Wyoming left Cardano and its privacy-focused Midnight project. off the shortlist for the state's upcoming stablecoin initiative. The Wyoming Stable Token Commission opted for platforms like Ethereum, Solana, Avalanche, and Zoe, but Cardano's absence, especially given Charles Hoskinson's tie to Wyoming, has sparked many questions. Charles Hoskinson didn't hold back, calling the selection process opaque and hinting at bias due to connections between decision makers and Ethereum. He's also criticized the lack of proof of concept requirements for the vendors. While no legal action has been taken yet, Charles Hoskinson hinted that it's on the table and warned of potential political fallout from this move. Wyoming has been known for its crypto-friendly reputation, plans to roll out the Wyoming stable token in early 2025. But this decision has raised concerns about fairness and transparency and how the project is being developed. But just to go back to Cardano and take the piss out of it, I've never been a Cardano holder and I don't see that changing anytime soon. Alright guys, so those are some updates from the crypto market that we've been focusing on. Just a reminder, if you're getting texts from a friend you haven't spoken to in many years asking about crypto, your mom starts asking which coin to buy, or crypto exchanges are back in the top 10 most downloaded apps on App Store, those are signs it might be time to take some profits off the table. Remember, you'll never lose money by taking profits. Sure, you might miss out on even better returns if you hold a little bit longer, but the truth is, no one knows what's coming next in the market. So take a portion off, whether it's 10% or 20%. If your investment doubles, take 50% off and let the rest ride as your moon bag. So guys, stay safe out there, let's keep making money together, and I'll catch you guys in the next one.